Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news that while you were celebrating a great All Blacks win, the rest of the world was showing a few wobbles. But first in Australia, their government looks like it is considering raising their GST from 10% to 15%, with parallel reductions in income tax rates. And New Zealand's track record on GST has been used to support the case. Well before any of these decisions are taken, the RBA will be assessing its cash rate tomorrow. Markets are unsure what will happen, but the odds reflected in their swaps market have quickly strengthened to a 44% chance of a cut, compared with 28% before last Wednesday's CPI data and Friday's PPI data. Still, that is not yet a 50-50 chance. Betting analogies are appropriate, given it will be decided on Melbourne Cup Day. Activity in China's factory sector unexpectedly contracted in October for a third straight month, the official survey showed overnight. This is heightening concerns that the Chinese economy is still losing momentum, despite a raft of stimulus measures. Adding to this worry, China's services sector, which has been one of the bright spots there, has also cooled last month. It is expanding, but now at its slowest pace in more than 6 years. The changes in both of these indicators are not large, but it is the direction that is raising eyebrows. In the US, 6 of their largest banks will need to raise an additional $120 billion, most likely in long-term debt, under a rule proposed by the Federal Reserve over the weekend. This is part of their plan to address too-big-to-fail issues. The banks will have 3 years to raise the extra capital, and even tighter rules will apply in a further 3 years. Advanced data out on Saturday shows that growth in the third quarter in the US was running at a modest 1.5% and far lower than the 3.9% in the second quarter. The slowdown was due in large part to companies running down stocks of goods in their warehouses. Analysts said this impact is likely to be temporary and the economy will get another burst when stocks are replenished. Consumer spending remained fairly strong, and this underpins the minimal market reaction to the low growth rate reported. The more the Fed looks at its data, the more likely it will raise rates, it is being claimed. In New York, the US Treasury 10-year yield benchmark rose on Friday, now at 2.15%. Also gaining was the US benchmark oil price, which is now just under $47 a barrel, and the Brent benchmark is just under $50 a barrel. The gold price fell, however, this time by only a small amount, and closed out the week at $1,142 an ounce. New Zealand dollar starts the week pretty much where it has been over the past 3, at 67.8 US cents, but very much higher against the Aussie at 94.9 Aussie cents. We were last at this level in May when we were coming down off the flirt with parity. We're also at 61.6 euro cents. The TWI is at 72.9, which is also a 5-month high. And finally, Standard & Poor's say that winning the Rugby World Cup is worth a boost to stock values in the weeks after the win. No word, though, on what it does to house prices. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.